So guys, what's up? Welcome back to the channel and welcome back to the amazing revision video of CA Interlaw. This revision video is going to be purely in English, and this revision video is not going to be like that kind of it's going to be like that kind of revision that we are only like running very fastly. It's not like that. We are going to study each and every topic very thoroughly, and in this revision video you will cover entire topics also, as well as we will cover the questions at the last also, right? So firstly we will cover each and every topic of the chapter, then we will cover the questions also. And it is kind of comprehensive revision, so you will be able to understand the topics as well, and then your questions will also be covered, so you will be like ready for every chapter. You will be ready and you will be fully ready for that. So that is the objective of this revision series, and we are going to cover each and every topic in a very detailed manner, and then we will do the questions as well, right? So for all the revision videos and for all the updates and for all the questions and for all the practice sessions or for all the information, you have to join the Telegram channel. Telegram channel is in the description box, so go to that Telegram channel and you should join that Telegram channel, and you will be getting all the updates and all the information, right? And if you are very new at this channel, then definitely subscribe to this channel, and you have to like this video so that it will reach to maximum number of students who are waiting for these revisions in South. So definitely like this video and do share with all your friends in all your circle or all your groups. You have to share it, right? And I'm going to cover all the chapters, like all 15 chapters I'm going to cover in the revision. Every chapter we will do revision, and for every chapter we will do the question. This is the same pattern we will follow because today is the first class, so I'm telling you all these things, that we will follow the same pattern for every chapter. We used to do like firstly we'll used to do the revision, then we will cover the questions, right sir. So we will start with the Companies Act 2013, and as we know that there are 15 chapters in the syllabus, and some are of corporate law and some are of other laws. So other laws we will discuss later, and right now we will start with the Companies Act, right? So Companies Act 2013, and this is the first chapter, preliminary chapter, and I'm going to discuss the relevant definitions, all the important definitions. So in this revision video we will cover the chapter number 1, all the relevant definitions, and along with that questions. Then we will come to the chapter number 2, incorporation of the company. So first of all, we start with the Companies Act 2013. Sir, what is Companies Act 2013? Companies Act 2013 is the act which is applicable on the company. Now you will say, sir, what is company? What is the meaning of the word company? So company is nothing. It is just association of person. Like people have made an association of person, and that association of person is working together for a common objective, and that is what we call a company. And that company is governed by the Companies Act 2013. But section 2 clause 20 of the Companies Act says that a company is a company which is incorporated under this act or under any previous company law, which means that company which is incorporated under the earlier laws, like Companies Act 1956, Companies Act 1913, that is also governed by this act. Sir, why? Because the act under which they were incorporated, that act is repealed now. And the act which is now into existence, that is Companies Act 2013, that actually is the act which is governing the earlier companies also, and the companies which are incorporated under this act also. That is why this line is written in the law, that company means a company which is incorporated under this act. See, the company which is incorporated under this act, definitely that is going to be a company as per this law, and on that the Companies Act 2013 will be applicable. But the company which were incorporated earlier, the act under which they were incorporated, that act is actually repealed. But if this line is not written over here, then the act under which they were incorporated, that act is repealed. And the act which is now into existence, that act would not be covering if this line would not have been written here over here. If this line was not written over here, then the act which is now into existence would not be able to cover the companies which were incorporated earlier. That is why this line is written, that it could be any company. It could be any company which is incorporated under this act or under any previous company law. This Companies Act 2013 will be applicable on that. Right, sir. Then we have to do some basic discussion to understand the further topics. Like whenever we incorporate a company, so that is governed by section number 7. That is altogether a basic discussion to make you understand some further concepts what I am going to tell. So please listen it very carefully. Then you will be able to understand the further concepts very easily, right? There are certain persons, for example, let's say they have to incorporate a company, so they will make an application to the ROC in the form number INC 32. Whenever you have to form a company, you will form either a private company or you will form a public company. If you will form a private company, then minimum 2 persons are required. If you will form a public company, then minimum 7 persons are required. And this is written in the section number 3 of the Companies Act that we will discuss in the chapter number 2 also. So to form a private company, minimum 2 persons are required. To form a public company, minimum 7 persons are required. And whenever you make an application to the ROC, you have to attach certain attachments. Like you have to attach memorandum of association, article of association, and you have to attach some other attachments also, but that we will discuss in the chapter number 2. When you will attach MOA, AOA, then the people who are forming this company, they will subscribe to this MOA. If it is a private company, then minimum 2 persons will be there. If it is a public company, then minimum 7 persons will be there. And when they will subscribe to this memorandum of association, they will become the subscriber to the memorandums. And when they will become subscribers to the memorandum, then they have to take at least 1 share in the company. And when they will take at least 1 share in the company, their name will be registered in the company will become like incorporated company will be incorporated. And when company will be incorporated, the name of these subscribers will be entered in the register of member, and these subscriber will turn into members. So we will not say directly like that we used to say. We actually used to say that in the private company, minimum 2 members are required. In public company, minimum 7 members are required. At the time of formation, they are not members. At the time of formation, they are persons. Those persons make an application, they subscribe to the memorandum, they become subscriber. After subscriber, they have to take the share. When they take the shares, their name is entered in the register of member. Then they become the member. So you have to keep this thing in mind that at the initial stage, they are not member, they are persons. Then they become subscriber, then they become the member. Then sir, what is private company? What is public company? Private company means a company that is defined under section 2 clause 68. 2 clause 68 states that private company means a company. In order to be a private company, you should be a company. Firstly, you should be a company. Either you should be incorporated under this act or under any previous company law. So that is a private company which has a minimum paid up share capital as may be prescribed. Sir, has CG prescribed anything? No, not yet. CG has not yet prescribed anything for the minimum paid up share capital. So private company means a company that you can start with any minimum paid up share capital because government has not prescribed anything. And by its article of association, by its article of association means that there must be 3 things in the article of association of a private company. There must be 3 things in the article of association of a private company. First, restriction. Second is prohibition, and third is limitation. First is the restriction. What does the restriction states that in a private company member cannot transfer the shares freely. There is a restriction on the right to transfer the share. For example, there is a private company KK Private Limited, and suppose there are 3 shareholders, Karan, Imran and Aman. Karan is having 500 shares, Imran is having 300 shares, and Aman is having 200 shares. Now Imran want to sell this 300 shares, so he cannot go directly to the market and sell the shares in the market. Firstly, he has to ask Karan and Aman. If Karan and Aman are ready to take the shares, then they can take the shares and Imran will sell the shares to them only. But if they refuse, then Imran has the right that he can sell the shares outrightly to someone else in the market. But this the Karan and the Aman is having the first right of refusal. This is called the right of first refusal, where these persons are having the first right to refuse. If they are ready to take the shares, then they should take the share. If they are not ready to take the share, then only Imran is having the right to sell the shares to the outsider. That is why I am saying there is a restriction. I am not saying there is a prohibition. There is a difference between the word restriction and prohibition. The word restriction states that you can do that thing, but conditionally. There is some condition, you have to fulfill that condition. If you will fulfill that condition, you can do that. Prohibition means that you cannot do that. Even after fulfilling any condition, you cannot do that. So restriction, in the case of restriction, you have to ask the existing shareholders first. That is the restriction, that you have to ask these shareholders. This right is called as the right of first refusal or preemptive right. This right is also called preemptive right. So can I say the share of private company are not transferable? No, it's wrong. If you will say that the shares of private company are not transferable, it is absolutely wrong. Private company shares are transferable, but shares of the private company are not freely transferable because there is a restriction. Right, sir. Then second point is that there is a limitation in the articles of association of a private company. What is the limitation? That the maximum number of member can be 200. But when you will count these 200, you have to exclude two people. You have to exclude two members. Sir, what are the two members? First, the person who are in the employment of the company, who are the present employee as well as member of the company. The persons who are employee of the company and they are also the member of the company, they are not counted in the limit of 200. Sir, why? Because company generally company gives shares to the employees to motivate them. And when company gives shares to motivate them, and you just imagine that there are 1,000 employees in the Reliance. There are 2,000 employees in the Reliance. Now, if Reliance wants to give shares to its employees by the way of ESOP or sweat equity shares, if Reliance is desirous of giving shares to them, then you just think the limit of 200 will be exhausted in minutes. It will be exhausted like this. And you will not be able to allot the shares to the outsider investors. That is why they said the persons who are in the employment of the company, who are the present employee, they will not be counted in the limit of 200. And the persons who have been formerly in the employment means they were in the employment. They are not in the employment right now. They were in the employment. And when they were in the employment, they were allotted the shares of the company. They got the shares during their employment. I'll explain this point with a very classic example. You just right now understand this point, that a person who was in the employment of the company and he got the shares when he was in the employment of the company. Now he ceased to be the employee of the company but continued to be the member of the company. Now he is no more an employee of the company. He left the job. He is not like continuing in the employment, but he is continuing in the membership. He ceased to be the employee of the company, but he continues to be the member. That kind of past member is not included in the limit of 200. So please keep this thing in your mind. The present employee will not be counted in the limit of 200 and the past employee will not be counted in the limit of 200. The people who are joint shareholders, sir, who are joint shareholders. For example, let's say there is a person whose name is like Ravi, and there is another person whose name is Ravina, and Ravi and Ravina got married to each other, and they say that we will do everything together, and they took the shares together. When they took the shares together, so they say that we will be counted as two shareholder or one. You will be counted as one shareholder because joint shareholders will be counted as one only. Right, sir. And then I'll say that there will be prohibition. There will be a prohibition also in the private company. Sir, what is the prohibition in the private company? That private company cannot invite the public to subscribe for its securities. Private company cannot invite the public to subscribe for its security. That is, you cannot give invitation to anyone that they should apply for your securities. And please keep this thing in your mind that here the word security is written. Here the word security is written, that is share, debenture, bond, anything. You cannot come up with a public issue of any security. It is totally prohibited to private company. That private company can never ever come up with a public issue for any security. This is a prohibition. This is not a restriction. This is a prohibition. This is not a restriction. It is totally disallowed to you that you cannot come up with a public issue. Right, sir. Let me give you an example on this point, sir. Please tell what is this point. This is clear to us that this is the present employee. Let me give you an example. For example, there are two employees who were the member also. Who were the member also of the company. Whether they will be counted in 200? No, because they are the present employee. They are the present employee. Then I'll say these employees left the job. They left the job, but they are member right now. They left the job, but they continue to be the member. Whether these people will be counted in the limit of 200? No, because of exception number B. Because of exception number B. Now understand very carefully. Now they sold the shares also. If they will sell the shares, what they got during their employment, they sold the shares also. Now the situation is null. Nothing is there, neither their employment, nor their shares, nor their membership. Now again, if they will purchase the share, whether they will be counted in the limit of 200, yes or no? Yes, now they will be counted in the limit of 200. Sir, why? Because this condition is ended here. Now they didn't got the shares during their employment. Just understand the importance of this line. They were the members while in that employment, during their employment. During their employment, they got the shares. But here now they do not got the shares while in their employment. They sold the shares, now they are free. Now they came out of that condition that they were past employee. Now they are not a past employee, they are not a member. Then now you purchase the shares from the market and you say that we were the past employee also, we are holding the shares now, no, you will be counted in the limit of 200. Right, sir. Now come to the definition of the public company. Sir, what is public company? Section 2 clause 71 talks about the public company. What is a public company? Very, very cute definition that public company means a company which is not a private company. Wow. Anything which is not a private company is a public company. What does they want to convey to us? That public company means a company. In the articles of the public company, you will not find those three things: restriction, prohibition, limitation. In the article of association of the public company, you will not find the three things, that is restriction, prohibition, limitation. So public company means a company which is not a private company, and the paid up share capital will be minimum as may be prescribed. Sir, whether government has prescribed anything? No, government has not prescribed anything. So you can start public company with any amount. And one important point is there: if there is a private company and that private company is a subsidiary company of a public company, the language is written like that: a private company which is a subsidiary of any company not being a private company. So if there is a company which is not a private company, that means it is a public company. So if there is a private company and that private company is the subsidiary of the public company, so we will say this private company will also be considered as a public company. That means the law will be applicable on this private company in the same manner as if it is a public company. Although it is a private company, but the law will be applicable on this private company in a manner as if it is a public company. So we can say that yes, it will be a deemed public company. For example, there is a company called Karan Limited, and that Karan Limited is a public company. And Karan Limited is the holding company. KK Private Limited is the subsidiary company, because Karan Limited holds 60% voting power in the KK Private Limited. So I'll tell you that holding subsidiary right now in few minutes. So this Karan Limited will become the holding company. This company will become the subsidiary company. So Karan Limited is holding company. KK Private Limited is subsidiary company. Also, although KK Private Limited is a subsidiary company, but this subsidiary company is a subsidiary of a public company. So we will say this is also a public company. That means the law will be applicable on the KK Private Limited in the same manner as it is applicable to a public company. So sir, what is the difference between private company and public company? We say private company should contain minimum number of members 2. Minimum members must be 2 in the private company, and in the public company minimum number of members must be 7. In case of private company, the minimum directors must be 2, and in case of public company, minimum directors must be 3. In case of private company, the quorum is minimum 2 members. What is quorum? Quorum means the minimum number of members that must be present to convene a meeting, to hold a meeting, to convene a meeting, to convene a general meeting. That is quorum. So in case of private company, the quorum is minimum 2. I am going to make you understand a lovable concept. You will love that concept, what I am going to tell you right now. Quorum is minimum 2 members. And in case of public company, the quorum is 5, 15, 30, depending upon the total number of members your company is having. If your company is having total number of members up to 1000, that you will study in chapter number 7. If your company is having total number of members up to 1000, then your quorum is 5 members. That means 5 members must be present in the general meeting. If your total number of members is more than 1000 but up to 5000, then 15 members is the quorum. And if your total number of members is more than 5000, then your total number of quorum is, minimum quorum is that 30 members should be personally present, right? So sir, you are saying that this private company becomes a public company, right? You are saying that this private company becomes a public company, so the law will be applicable on this private company in the sense as it applies to a public company. So you just want to say that this private company should also contain minimum 7 members. This private company should also contain minimum 3 directors. I'll say yes, you should have now 3 directors minimum. If you are having only 2 directors, that is non-compliance. Because now you are a subsidiary of a public company, you will be treated as a public company. The law will be applicable on you as a public company. So please, you should have at least 3 directors. And now when you will conduct your general meetings, the quorum will be applicable this. And when this quorum will be applicable, sir, you said private company can be formed with minimum 2 members. Suppose this private company is formed only with 2 members. But now you are saying quorum is this. Yes, you have to comply with this quorum. Quorum is minimum 5. Suppose if you are having up to 1000 members, quorum will be minimum 5. So KK Private Limited, if formed with only 2 members, do we need to increase the member also? Definitely yes. Definitely yes, you have to increase this members from 2 to at least 5 you have to increase. No one is going to tell you, and you will be like finding why private companies are increasing member from 2 to 5. Have you ever heard about this concept that we have to increase the member from 2 to 5? Logic is not clear to anyone, na? People used to think that okay, it is okay, it should be okay that we should increase from 2 to 7, but I am telling you, you should increase 2 to at least 5. You have to increase, because if you will not increase to 5, then how you will comply with the provision of the quorum? Because you are a private company and you are a subsidiary of you become the subsidiary of public company. The law will be applicable to you in the sense as it applies to a public company. So yes, you have to fulfill the requirements of the quorum also as it applies to a public company. You also should have the quorum of 5, 15, 30. So at least 5% should be the quorum, na? If your 5% should be the quorum, then you have to increase your member from 2 to at least 5. But for the simplicity, private companies generally increase it from 2 to 7. But that I wanted to convey some special topic to you that understand, and you should ask like from 2 to, we have to increase from 2 to 5. But yes, in the real life, generally companies used to increase from 2 to 7 for the simplicity. But yes, you have to do. Sir, you also said that in the private company, the maximum number of members is 200. In case of public company, there is no limit of the members. Private company cannot come up with the public issue, but public company can come up with the public issue. Public company can issue shares to the public. Public company can issue any security to the public. Sir, you also said private company shares are not freely transferable, but public company shares are freely transferable. So we have one more doubt, that this KK Private Limited is a subsidiary company of a public company. So you are saying this become a public company? Now, if this company becomes a public company, so can we say this company can have unlimited members? Can we say the shares of this company will be freely transferable? Can we say that this company will be able to come up with the public issue? Na baba, na. No. It's absolutely no. Why? Because by basic nature, it is always a private company. By basic nature, it will always be a private company. Basic nature means that three things: restriction, prohibition, limitation. That can never be changed. Even if you are a private company, you become the subsidiary of public company, the entire law will be applicable to you as like a public company. But these three things, these basic nature, restriction, prohibition, limitation, this will never be changed. This will never ever be changed. This will remain the same. The private company, even if it is a subsidiary of a public company that cannot come up with the public issue, the maximum number of members remains 200 and the shares will remain restricted. Transferability of the share remain restricted. The shares are not freely transferable. Right, sir. Then we will come to the topic of holding company and subsidiary company. Just understand, it is very easy concept. Holding company and subsidiary company. What is holding company? What is subsidiary company? Treat me like a company and treat yourself like a company. Like this company is holding more than 50% voting power of your company, then this company is the holding company and your company will be a subsidiary company. If your ego gets hurted, like revert it. Your company is holding more than 50% voting power of my company. So your company will become holding company. My company will become the subsidiary company, right? Sir, is there only the reason? This is the only reason that by which we can become the holding subsidiary? No. If a company holds more than 50%, what is more than 50%? Is that 51%? No. More than 50% means it could be 50.01%. Keep this thing in your mind. People used to do mistake at this point. They used to say 51%. But 51% is not always more than 50. It's like that. You should not say 51% is more than 50. 50%, it's more than 50%. It's like 50.01%. What I'm saying is, let's say there is a company, the name of the company is K Limited. K Limited is having 1 lakh shares. So according to you, you say that more than 50% is 51%. So do I need to have 51,000 shares? Then that company will become subsidiary, I'll become holding? No. It's more than 50. More than 50 means 50,000 one share. If I am having now, I am having more than 50% shares. I am having more than 50% voting power. I am presuming that these are the equity shares and one share equals to one vote. So I am having more than 50% voting power. So remove this thing from your mind that it is 51%. It's more than 50. It means 50.01%, 50.001% be like it's more than 50%. So that I'm saying that if a company is having more than 50% voting power of some other company, then that other company will become the subsidiary company and this company will become the holding company. Or there is another criteria of becoming holding subsidiary. If a company controls the composition of the board of director of some other company, like A Limited is a company and that company is holding the more than 50% voting power of B Limited. So B Limited becomes the subsidiary, A Limited becomes the holding. Or I can say if A Limited controls the composition of board of director of B Limited. Sir, what is control of composition of board of director? Control of composition of board of director means if you are able to appoint or remove all or majority of the directors in that company, then we will say that you are able to control the board of director of that company. The composition control will come to you when you are able to appoint or remove all or majority of the directors of that company. So if this company is able to appoint or remove all or majority directors of your company, then your company's control is in my hands. Then your company control is in my hands. I am controlling your composition of board of directors. So this company becomes the holding, your company becomes the subsidiary. Now there is a proviso also given that there is a concept of layer of subsidiary. Suppose B is the subsidiary of A. B is the subsidiary of A because A holds 60% voting power in B. B holds 60% voting power in C. So C becomes the subsidiary of B. B is the subsidiary of A. So can I say C is also the subsidiary of A? C is also the subsidiary of A. This is called the chain concept or a layer concept. But one point should be noted that only 2 layers are allowed, provided that such class of holding company as may prescribe shall not have the layer beyond such number as may be prescribed. The number which is prescribed, that is 2. Only maximum 2 layer of subsidiary is allowed. Beyond that, the layers of subsidiary will not be allowed. Then there is a MCA circular that is also given. MCA circular says that suppose there is a person, that person name is called Sam. Sam has given funds to a company. Just understand very carefully. Sam has given funds to the company and the company is, let's say, K Limited. K Limited is holding. You just remove Sam now. Firstly, I'll make you understand. There is a company K Limited. K Limited is having 60% voting power in the KK Limited, right? So you will say, yes, sir, K Limited is the holding company, KK Limited is the subsidiary company because this company is holding 60% voting power. So K Limited is a holding company, this company is a subsidiary company, right now, because it has more than 50% voting power. But later I got to know that K Limited is not holding 60% on its own. There is a person, Sam, who has given the funds to the company. This K Limited is holding 60% of KK, but this out of that 60%, there is a breakup. 40% K Limited is holding on its own and 20% is on behalf of Sam. 20% is on behalf of Sam. So apparently you are seeing that K Limited is holding 60% in KK Limited. But all 60% do not belong to K Limited. Actually only 40% is belonging to K Limited. K Limited is holding 60%, but out of that 60%, 20% K Limited is holding on behalf of Sam in a fiduciary capacity, in a trustworthy capacity. So this holding will not be considered for counting the holding subsidiary relationship. So you will not count this 20%. This 60 will actually not be counted as 60. This 60 will be counted as 40. This is the circular written over here that any company is holding in another company in a fiduciary capacity. So such holding which you are holding in a fiduciary capacity, that will not be counted for considering the holding subsidiary relationship. Right, sir. Now I have given some examples to make you understand what is the concept of holding subsidiary. One more thing you have to understand, that when you have to check this more than 50% voting power, either you can hold directly in that company or through one or more of your subsidiary you can hold, right? Like how, I'll give you example. Karan Limited is holding more than 50% voting power of the Tata Motors Limited. So can I say, yes, this is the holding company, this is a subsidiary company? This is a very simple example. Now I'll come to K Limited is having 100 preference share of T Limited. This company is having preference share also, equity share also. I am having the preference shares, all preference shares, but still there is no holding subsidiary relationship. Sorry, why there is no holding subsidiary relationship? You are holding out of 190 shares, total 190 shares are there, 100 preference, 90 equity, there are 190 shares, and you are holding entire 100 shares. Then why you are not holding and why that company is not subsidiary? Because I am holding preference shares. Preference shares do not carry voting power. Voting power is only there in the equity shares. Voting power is only there in the equity share. That is why no holding subsidiary relationship. Sir, here you are holding 45 equity shares. You are holding equity shares. So there is a holding subsidiary relationship. No, because there is 90 equity shares. You are holding exactly 50%. You have to hold more than 50, then it will be considered as a holding subsidiary relationship. Here you are considering you are having 50 equity shares out of that 90. Yes, now you are having out of that 90 which is having voting power. Now you are having more than 50% voting power in that company. So K Limited will become holding and T Limited will become the subsidiary company. Right, sir. Now understand. K Limited is holding 40% voting power of the T Limited. And K Limited is holding 60% voting power of the C Limited. Whether C Limited is the subsidiary of K Limited, yes, because of 60% voting power. Whether T Limited is the subsidiary of K Limited, no, because there is only 40% voting power. Whether T is the subsidiary of C, sir, there is no connection between C and T. Right, clear? But understand this example very carefully now. There is a company called K Limited. K Limited is holding 40% voting power of T Limited. K Limited is holding 60% voting power of C Limited. So it is very much clear now. Please don't tell, sir. This we know only. Only this answer we know. This we have to understand right now. This is the answer. We are already knowing this answer. We will tell you that C Limited is the subsidiary of K Limited because K Limited is holding 60% voting power in the C Limited. Right. K Limited is holding 40% of T Limited. So apparently you will say that T Limited is not the subsidiary of K. But K is directly holding 40% in the T. And K's subsidiary is also holding 12%. See, holding subsidiary is like parent-child relationship. If the parent is directly holding in that company and my child is holding in that company, so he is my child. That child is holding in that company, so his holding is also my holding, na? Oh, his holding is also my holding. So that is why this holding is to be clubbed with this holding. That is what I was saying, that the company is holding more than 50% voting power of the other company, either directly or through one or more subsidiary. So K Limited is directly holding 40% in T Limited and K's subsidiary, the subsidiary of K is also holding 12%. So this holding is also considered as the holding of K Limited. So K's holding will be clubbed and this 40 will become 52 by clubbing this 12%. This will become 52%. So yes, we will say T Limited becomes the subsidiary of K Limited. Sir, there is a question whether T Limited will become the subsidiary of C. I asked you why. Because, sir, you see na, T Limited will become subsidiary of C because C is directly holding 12 and the holding company of C is also holding 40%. So we will club this 40 with 12. No, you should not club this downward. You should only club this upward. You have to club this like with this. The holding company is holding in that company correctly and the subsidiary of that holding company is holding in that company. That holding you will club in that. I want to say that this holding will be clubbed in this. You have to club upward. Whatever your subsidiaries are holding in other company, their holdings will be clubbed with you. Your holdings will not be clubbed with them. Oh. Then there is another question. This is your homework. You can check, you can write this question in your notebook and you should find out which company is subsidiary of which company. Then I'll say you come to this point. K Limited is a company, that company is holding 1% voting power, but K's subsidiary is holding 55% voting power. You just see directly there is only 1% stake, but the subsidiary of K is holding 55%. So this 55% will be clubbed with this 1%. We will say yes, T Limited will become the subsidiary of K Limited because K Limited is holding 56%. Sir, how 56%? Directly 1% and through its subsidiary 55% because C is the subsidiary of K. Right, sir. Then I will come to some important points. Sir, Karan is holding 48% of the K Limited. Whether K Limited is a subsidiary? No, because you will say it is not more than 50%. Sir, if Karan is holding 58% voting power of K Limited, then now it is a subsidiary company, na? No, because K Limited is subsidiary. No, because Karan is holding more than 50% voting power. Holding subsidiary relationship exists at that time only when there is a holding company, when there is a subsidiary company. They both should be the company. Here there is an individual person who is holding more than 50% voting power. This is not a company. Karan is a company. This person sitting in front of you is a company. No, this is individual. This is the creation of God. This is not creation of man. Actually, this is creation of God. Okay. Right, sir. So Karan is actually holding 58%. So I'll say Karan is not a company. This is holding company means it should be a company. Company as per 2 clause 20. Company means a company incorporated under this act or any other previous company law. So I will say this is not a company. So there is no holding subsidiary relationship. Then I will say that there is a company Karan Limited. Karan Limited is holding 60% voting power of the Apple Inc. Apple Inc. is a company. Wait, sir, wait. Company means that company which is incorporated under Companies Act of India or any other previous company law, whether 2013 or any other previous company law. But this Apple Inc. is US company. It is not a company as per the Companies Act. So I'll say this is a body corporate. So Karan Limited is not holding 60% voting power in a company. You say na subsidiary company is a company, sir. You said. Now this is not a company. So whether this is a holding subsidiary relationship or not, yes, this is a holding subsidiary relationship because as per holding subsidiary definitions, the word company includes body corporate. For the purpose of these sections, holding company and subsidiary company definitions, for the purpose of these definitions, the word company includes the body corporate also. Because body corporate includes the company which are incorporated outside India. Body corporate include the companies which are incorporated outside India. You got it or not? Yes, sir. So whether this is not a company, but still this is a holding subsidiary relationship because section 2 clause 46 and that for 2 clause 46 is a holding company and 2 clause 87 is subsidiary company, and it is given clearly in these definitions that holding company and subsidiary company definitions clearly states that in these sections, in these definitions, the word company includes the body corporate also. So that is why I said yes. It must be holding subsidiary relationship, right? So holding subsidiary relationship is that the company is holding more than 50% voting power of your company or controlling the composition of board of director of your company. Then we will say that yes, this is a holding company, this is a subsidiary company, right, sir. Sir, can you please tell, it is written in the law, it is written in the book only that controlling, how you will control the composition, that you are able to appoint or remove all or majority of the directors, that I have told you. But how you will get that? That is just for knowledge. I am telling you that how you can get that right to appoint or remove all or majority of the director. You know, director is appointed by passing OR, ordinary resolution. So if a company gets the power to pass ordinary resolution in that company, if a company gets the power to pass the ordinary resolution in that company, means you are having that much of share that you yourself can pass OR. Means only your votes are sufficient to pass an ordinary resolution. So definitely, if you will vote in yes, the OR will be passed. You are having that much shares. So if the OR will be passed, definitely the director will be appointed or removed. So you are having the power to appoint all or remove all or majority of the directors. But there is one another route also. What is that route? Suppose there is a company K Limited, and K Limited has. Suppose there is a company T Limited, right? T Limited has took the loan from the bank of rupees 200 crore, but T Limited defaulted. T Limited said that there is nothing to pay. We are not even having a single penny to pay. So the company has defaulted to repay the loan, and K Limited said, okay, we will repay your loan, but we will control your management now. K Limited said that we will repay your loan, but we will control your management now. So here they have got the control of the composition of board of director without acquiring any single share. Without acquiring any single share, K Limited will get the right to control the composition of board of director. So we will say by this also you will be able to control the composition of the board of director. This proviso I have already told you, that layer concept, and this concept I have already told you, that is MCA circular. This is the concept of holding company and subsidiary company. Right, sir. Now I'll come to what is the question we will discuss later. This question is already covered in the writing practice that you can see. This question, yes, I want to discuss with you. There is a company, suppose, called Shiv Limited. Shiv Limited is having two subsidiaries, Ram Limited and Rohan Limited. They both are the subsidiary of this Shiv Limited, right? There is a company called Manav Limited. Manav Limited is having 8 lakh equity shares. Total 8 lakh equity shares are there of the Manav Limited. And Ram Limited is having 3 lakh shares out of that 8 lakh. Rohan Limited is holding 1.5 lakh shares out of that 8 lakh. So they together hold 4.5 lakh shares out of that 8 lakh. Whether Manav will become subsidiary of Shiv? Yes. Manav will become subsidiary of Shiv because Shiv is not directly holding. but Shiv is holding through its subsidiary, because these both companies are the subsidiary of Shiv Limited, and Shiv Limited is not directly holding anything in the Manav Limited, but Shiv Limited is holding in the Manav Limited through its subsidiaries. So Shiv Limited is holding 3 lakh shares through Ram Limited. Shiv Limited is holding 1.5 lakh shares through Rohan Limited. So directly there is no holding of Shiv Limited in the Manav Limited. Apparently it will be like looking to you like there is no holding subsidiary because this company is having 0% shares and 0% voting power. But this company is having more than 50% voting power through its subsidiary. So yes, this Manav will become the subsidiary of the Shiv Limited. Right, sir. So I have explained you in a very, very detailed way the holding company and subsidiary company. Now I'll come to what is associate company. It is very, very easy. If there is a company and that company is having significant influence in some other company. Sir, what is significant influence? Significant influence means that you are holding 20% or more voting power of that company. If you are holding 20% or more voting power of that company, if you are holding more than 20% or more voting power of that company, then you are having significant influence in that company. So the company in which you are having the significant influence, that company will become your associate company. But keep one point in your mind, that company will become your associate company. You will not become associate of that company. That company will become associate of your company. The company in which you are having significant influence, that company will become your associate company, and you are not the associate of that company, right? And one more thing. The company in which you are having the significant influence, that should not be your subsidiary company. It is clearly written in the definition that if a company is having significant influence in the other company, but such other company should not be a subsidiary company, then such other company is considered as the associate company. I have given you the example like, see, there is company A Limited, B Limited. B Limited is holding 20% or more voting power in A Limited. So I'll say B Limited is having significant influence in A Limited, so A Limited will become the associate company of B Limited. A is associate of B, but B is not associate of A. Please keep this thing in your mind that A is associate of B, but B is not associate of A. Right, sir. Now understand, it is written and includes joint venture company. Wait, let me tell you one more point. What is significant influence? Significant influence is that you are having 20% or more voting power in that company, right? That is also significant influence. And if you are able to take the operating decisions of that company, policy decision, operating decisions of that company, that is also significant influence. So what is significant influence? Either you are having 20% or more voting power in that company, that is also significant influence. Or if you are able to control the business decision of that company, then also it will be, even if you are having 1% voting power, 2% voting power, 5% voting power. But if you are able to control the business decision of that company, I'm not saying control the board of director. If you will control the board of director, that company will become your subsidiary. Oh, that company will become your subsidiary. You are only controlling the business decision. So if you are able to control the business decision of that company, जैसे for example, I have given, there is a company called Jet Airways and there is another airline company that is called Etihad Airways. Etihad Airways is holding only 19% voting power but controls the business decision of Jet Airways. This Etihad Airways says that whatever the fare, whatever the cabin crew, everything will be decided by Etihad. So we will say this company is having significant influence over Jet Airways. So this Jet will become the associate of Etihad, even if there is no 20% or more voting power. Sir, it means you want to say, if I will be, suppose this is a company, right? This company is having 20% or more voting power in other company, then it will become associate. Okay, sir. Up to 50%, it will be your associate. If you will hold more than 50%, that will become your subsidiary. Suppose A Limited is holding 20% voting power in B. So B is the associate of A, right? If A is holding 30% in B, then B is the associate of A. 40% in B, B is the associate of A. 50% in B, B is the associate of A. But if A holds 60% voting power of B, then B will become the subsidiary of A, na? Then B will become the subsidiary of A. Yes, sir. Sir, whether that concept is also applicable here, that this company is directly holding 19% voting power and its subsidiary is also holding 2% voting power, so it will be clubbed. 19 plus 2 will become 21. 19 plus 2 will become 21%. So we will say yes, Y will become the associate of X because X is directly holding 19 and X subsidiary is holding 2%. So this 2% will be clubbed with 19% and X will be actually holding 21%. No. Whether I have told you, whether it is written ever anywhere here, had I said you this thing? No. This concept is not here. So I'll say that the subsidiary of my subsidiary is my subsidiary. Understand very carefully what I'm going to say now. The subsidiary of my subsidiary is my subsidiary. The subsidiary of my associate is not my subsidiary. The associate of associate is not my associate. The associate of my subsidiary is not my associate. Oh, sir, what you are saying? You just listen it once again, you will understand it. Right, sir. That true concept is only in case of subsidiary. Through its one or more subsidiary, that through or indirect concept is only there in the subsidiary, not in the case of associate company. And one more thing you have to keep in your mind, that joint venture company will always be your associate company. Like there is a company A Limited, there is a company B Limited. They both have started a joint venture. They have given 10%, they have given 10%. There is another some people who have contributed 80%. And they have constituted a joint venture company, that is AB Limited. This AB Limited is the associate of A, yes. Where it is 20% or more voting power. Baba, it is written and include joint venture company. So this and is breaking the definition here. That definition what is given earlier you need not to consider. They are saying joint venture company will be always be considered as your associate company. It will always be considered your associate company. So AB Limited will be considered the associate of A? Yes, because AB is the joint venture of A Limited. AB Limited will be associate of B? Yes, because AB Limited is the joint venture of B Limited. Sir, whether A and B will be considered associate of for each other? No, A and B will not be considered associate of each other. If you are if you want to write the examples, you just pause the video, you write down the example and then you can start again. Right, I am trying my best to make you understand each and every concept with very clear examples. Right, sir. Now I am coming to the small company. Sir, what is small company? Small company means a company other than a public company. That means small company should always be a private company. Point you should keep in your mind. Keep that point in the pointers. I'll be giving you the keywords, right? Small company means a company other than a public company. That means small company means a private company. And that private company must have the maximum paid up share capital of 4 crore and maximum turnover is 40 crore. There is word and, not or. Both the limits should be fulfilled. The paid up share capital should not be more than 4 crore. The turnover of the preceding financial year should not be more than 40 crores. Then only it will be called as a small company. Small company will always be a private company. It will always be a private company, and that private company's maximum paid up share capital is 4 crore and the turnover is maximum 40 crore. If any of the limit is exceeded, then you will lose the status of the small company. Sir, you have written 50 lakh in section. When this section came, they have written 50 lakh and 2 crore, but they have given the power to the CG that CG can increase this amount as and when required, and they have increased the amount by the way of rules. Now they have increased this 50 lakh to 4 crores, and now they have increased this 2 crores to 40 crores. So, sir, what is the limit we have to keep in our mind for examination? What is the limit we have to learn? We have to learn the limit of 4 crores and 40 crores. We have to learn the limit of 4 crores and 40 crores. And this 10 and 100 is what that I'll also tell you. Sir, whether they can further increase this amount? Yes, they can further increase this amount. The CG can increase this amount further also. But they can increase, but maximum up to 10 CR. Whether they can increase this 40 crore further in future? Yes, they can increase, but maximum up to 100 CR. This is the relevance of this 10 and 100. In short, I'll tell you what is the important limit, that is 4 and 40. That is 4 and 40, right? And nothing in the section 2 clause 85 shall apply in the following cases. That means these company will never be considered as a small company even if their criteria is satisfied. Even if they will satisfy the limits of 4 crore, 40 crore, but this company will never be the small company. If you are a holding company, then how you can be the small company? You are holding shares in that company. You are a big company, you are holding shares, you are controlling the board of some other company. How you can be a small company? So you cannot be the small company. If you are a subsidiary company, you are a group company. Your parent is someone, your parent is there. Your parent company is there. You are a group company, you will not be considered as a small company. So I'll say holding company, subsidiary company can never be the small company. Even if their paid up share capital is up to 4 crore, their turnover is up to 40 crore, doesn't matter. You will be considered, you will not be considered, never ever ever you will be considered as a small company. Section 8 company will not be considered as a small company, and company or body corporate governed by the special act of parliament, they will also not be considered as a small company. Right, sir. So I have written in the Hindi that you should never consider these three companies as a small company. There is an example also. In the financial year 21-22, paid up share capital of the company was 4 crore, turnover was 40 crore. In 22-23, paid up capital is 4 crore, turnover is 50 crore. Tell me whether it is a small company, yes or no. You will say no. Because you have said, sir, turnover should be up to 40. But here the turnover is 50. So why you have written yes? You have written wrong answer. You don't know anything. You have to learn first. Go and take some revision and classes and then come to us. No, it's not like that. Sir, it is a small company. Why it is a small company? It is a small company because the turnover you have to check now, that is of previous year. You have to check the turnover of the preceding financial year. So preceding financial year turnover was 40 crore. So definitely I'll say yes, it is a small company. Then when I'll come to financial year 23-24, then I'll say, oh, paid up share capital is 4 crore, turnover is 30 crore, but this turnover is not relevant because we have to check the turnover of the preceding financial year. So we will say now it is a small company. No. This is the concept of small company. Now I'll come to the another company that is called government company. Sir, what is government company? Government company means a company whose at least 51% paid up share capital. Now here government has clearly written 50, lawmaker has clearly written 51%. Now I am not saying more than 50. Now it's actually 51%. And here it is paid up share capital, not voting rights. Not voting rights. Paid up share capital includes both equity as well as preference. So if government is holding more, at least 51% of the paid up share capital of any company, then that company will become the government company. Sir, which government? Central government. Either it is held by alone central government, or it is held alone by state government or some state governments, or partly by the central, partly by the state government. Any combination can be there. Any combination can be there, then it is called a government company. And any company which is a subsidiary of government company will also be considered as a government company. If you are a subsidiary company of the government company, you will also be considered as a government company. One more thing you have to note, that if the company has issued DVR equity shares, DVR equity shares is what? Differential voting right equity shares. If the company has issued DVR equity shares, then you have to replace this word paid up share capital with the voting power. Then you have to check the voting power in case of paid up share capital. Then you have to check the voting power in case of paid up share capital. I'll give you example. Government of India is holding 54% paid up share capital of Steel Authority of India Limited, SAIL. Then this company will be considered as a government company. Government of India and some state government is holding 60% paid up share capital of this company. Yes, it is a government company. And now there are so many state governments and they are holding 10, 15, 20, 16, 10. They together collectively hold more than at least 51% you have to hold now. They are holding more than 51%. So I'll say yes, it is a government company. Now government is holding 60% paid up share capital of SAIL. So SAIL is a government company. Very easy. But KK Limited is the subsidiary of SAIL because SAIL is holding 52% voting power of KK Limited. So KK Limited will become the subsidiary company of SAIL Limited. So if you are a subsidiary of government company, then you will also be called as a government company. You will also be considered as a government company. So KK Limited will also be considered as a government company because it is a subsidiary of SAIL, because it is a subsidiary of government company. Right, sir. This is your homework example. You can read it. So, sir, please tell how many types of companies are there. You just have to check that 51% or more ownership is with whom. If it is with the government, if it is with the government, then it is a government company. If it is not with the government, then it is a non-government company. If it is with the government, that could be a private company also, that could be a public company also. Sir, you want to say government can acquire the 51% or more of the paid up share capital of private companies also. Yes, there is a real example. See, companies are always and always of two types, private and public. Basic nature companies will always be of two types, private and public. Only and only that there are two types of the company, that is private and public. There are some added feature by which they will become the government company, holding company, subsidiary company. By default settings of the company, default settings are like that. There are only two types of company, private and public. Now, if some companies hold 50%, more than 51 voting power of that company, that will become holding, it will become subsidiary. If 51% or more paid up share capital is held by government, then this company will become the government company. So that is not a concept that government companies are always public companies. No, government companies can be any company. Just the difference is only that company's 51% or more paid up share capital is held by the government. That company's 51% or more paid up share capital is held by the government. So if there is a private company, and if 51% or more paid up share capital of that private company is held by the government, that private company will become a government company. Same with the public. And if 51% or more paid up share capital is not held by the government, then it is a non-government company. And that company either could be a private company or it could be a public company. Right, sir. Now I'll come to the another definition, that is called body corporate. Sir, what is body corporate? Body corporate includes. Body corporate means, it's not means, it's includes. Body corporate includes the company incorporated outside India. Whatever the company which is incorporated outside India, that is covered in the definition of body corporate. That is covered in the definition of body corporate, but these will not be included in the definition of body corporate. First, cooperative society. Cooperative society could be body corporate as per their respective act. As per their act, they could be body corporate, but I'll say you will not become the body corporate as per this act. As per this act, you are not considered as a body corporate, or any other body corporate which will be body corporate as per their respective act. But if CG will specify them, then they will not be considered as a body corporate as per Companies Act. They will not be considered as the body corporate as per Companies Act if CG will specify the name of any body corporate here. Sir, CG has specified any name? Yes. Societies, they have specified societies registered under Society Registration Act. So that is also not considered as a body corporate for the purpose of this act. But here the word is written, not being a company as defined in this act. What does this mean? This means that CG can specify any body corporate to exclude it. But CG can never ever exclude the company from the definition of body corporate. It is written any other body corporate as the CG may specify, but it should not be a company. It should not be a company. That means company will always and always be considered in the definition of the body corporate. It will always be considered in the definition of body corporate. You got it or not? Sir, it means you want to say that company is always a body corporate. But body corporate do not include the body corporate include the company. Yes, a company is a company also. A company is a body corporate also. Body corporate include the company incorporated outside India. Whatever the company which is incorporated outside India, that is a body corporate because it is included in the definition of body corporate. But this is not included in the definition of company. The company is the company which is incorporated under this act or any other previous company law. So I am saying, hello, listen to me. I am saying that there is a company. Let's say I'll give you example. There is a company, Tata Motors. Whether Tata Motor is a company as per 2 clause 20? Yes, because it is incorporated under this act or under any previous company law. So it is a company na? Yes, it is a company. As per Companies Act 2013 section 2 clause 20, it is a company. Whether Tata Motor is a body corporate? Yes, it is a body corporate. Whether Tesla is a company? No, because Tesla is not incorporated under our law. It's not incorporated under this Companies Act or any other previous company law. It is incorporated outside India. So Tesla is not a company, but Tesla is a body corporate. Yes, Tesla is a body corporate as per our law because body corporate includes the company incorporated outside India. Sir, what do you want to say? I just want to say you that every company is a body corporate, but every body corporate is not a company. Every company is a body corporate, but every body corporate is not a company. It is as simple like that, that every father is a son, but every son is not a father. Every father is a son, but every son is not a father. Oh, this you need not to write in the examination, right? They will be calling you again in the examination if you will write that. Now I'll come to section 2 clause 52. What is the listed company? Listed company means any company which has listed any of its security on the recognized stock exchange. Sir, what is the meaning of the word security? Security word will have the same meaning as given in the SCRA 1956. SCRA, it means Security Contract Regulation Act 1956. And this is the act which is giving you the meaning of the word securities. And if you have listed any of your security on the recognized stock exchange, then I'll say that is a listed company. But Rule 2A says that there are some companies which will never ever be considered as a listed company. They will not be considered as a listed company. Sir, what you have explained over here? Oh my God. Here we have explained. Let me explain you. Securities I have bifurcated that there are equity shares, there are convertible security, there are non-convertible security. In convertible security, you have convertible preference share, you have convertible debentures. In non-convertible security, you have non-convertible preference shares, non-convertible debentures. And equity shares can also be of two types, like normal voting right, one share, one vote, and differential voting right. Differential voting right shares are what? One share, more than one votes, or like any combination other than one share, one vote is DVR equity share. Like one share, three vote, one share, four votes. It's like that. That is called DVR equity share. So convertible security includes convertible preference share, convertible debenture. Non-convertible include non-convertible preference share, non-convertible debenture. Sir, can a public company can come up with the public issue of these things, of these securities? Yes, public company can come up with the public issue of anything, and listing becomes mandatory. Whenever a public company comes up with the public issue of any security, listing becomes mandatory as per section number 40. Section number 40 of the Companies Act says that listing is mandatory. You have to get it listed. And when you get it listed, you will be considered as a listed company. When you get these securities listed, you will come up with public issue of any of the security. If this security will be listed, you will be considered as a listed company. Sir, if they will come with the private placement of these security, whether they can get that security listed? Yes, listing is optional. Listing is optional, but if you get these securities listed, you will be considered as a listed company. You will be considered as a listed company. But how you will not be considered as a listed company, we will pick up the case from here, right? Can a private company come up with the public issue? No, it is totally prohibited. You cannot come up with the public issue of any security. Sir, if the private company issue the shares with the private placement, if the private company issues the private placement, issue the equity share by the way of private placement. If a private company by the way of private placement issue the equity share, can you list it? No. Why, sir? No. Because if they get listed, the share become transferable. And there is a basic nature of the private company that private companies' shares are not freely transferable. So if we will allow you that you should list these equity shares, so then your share will become transferable, na? And if your share will become transferable, then that restriction will be curtailed. Oh, so that is why it is not allowed. Sir, can a private company come up with the private placement for convertible security? Then can they list their convertible preference share? No. Again, preference share is also a share, na? You cannot list it. The restriction will be lifted. Can they list their convertible debenture? No, because later on it will be converted to share. Again, that restriction issue. Can they list non-convertible security? No. Non-convertible preference share you cannot list because it is also a preference share. Share is a share, na? It's a convertible or non-convertible equity or preference. It is a share, so you cannot list it. Can you list non-convertible debenture? Yes, you can list it, but by the rule 2A, they have said this will also be not considered as a listed company. Even if you list it, we will not consider you as a listed company. Private company will not be considered as a listed company. So rule 2A you have to keep in your mind. That was the extra knowledge. What you have to learn for the examination is this. Rule number 2A says that if there is a public company whose equity share is not listed, very important point, whose equity share is not listed, but that public company by the way of private placement, because if you will come up with the public issue, listing becomes mandatory. You will be considered listed. But if you are coming up by the way of private placement and you issue non-convertible redeemable preference share and get it listed, you will not be considered as a listed company if your equity share are not listed. If your equity share is not listed, you get your non-convertible debt security listed by the way of private placement, you will not be considered as a listed company. If you get both of the securities listed by the way of private placement, you will not be considered as the listed company. If you are a private company and by the way of private placement, you bring NCD issue and you get it listed, you will not be considered as a listed company. And if you are a public company and your equity share is not listed in India, but it is listed outside India, you will not be considered as a listed company. You will not be considered as a listed company. Right, sir. Now I can say that on the basis of registration, there are two types of company. One is private, one is public. OPC is also a private kind of company. OPC is not a third type of company. OPC is also a private company. OPC is what? Sir, OPC is a one-person company where there is only sole member. We have to discuss this entire concept in chapter number 2. OPC is the sole member company. That person must be individual, not an artificial person. That must be Indian citizen. He could be resident, he could not be resident. He may be resident, he may not be resident. And he must be major, he should not be minor. He should not be minor. So on the basis of registration, I can say there are two types of company, private and public. On the basis of liability, I can say there are three types of company. First, that company where the liability of the member is limited by shares. And they have to pay only that amount for which they have agreed. They have taken the shares and they have agreed that I'll pay this much of amount. That is only their liability. Their liability is limited to the extent of the amount of shares. What is company limited by guarantee? Company limited by guarantee means they have guaranteed an amount that they will give at the time of winding up. They will give at the time of winding up. This can be with share capital, without share capital. Means a company limited by guarantee can be with share capital. Then the member will be having dual liability because shares are also there. So they have to pay the amount of shares also during the lifetime of the company. And when the company goes into winding up, they have to give the guarantee amount also. But if the guarantee company is without share capital, then they are having only a single liability, that is guarantee amount they will pay at the time of winding up. And there is some unlimited companies also, but they are very, very, very rare. Very rare, next to impossible you will find them. But yes, I have given one example. Unlimited company is a company where the liability of the members are unlimited. And again, it can be with share capital, it can be without share capital. Now I'll come to some remaining topics of chapter number 1. We have completed so many types of companies definition. Now I'm coming to some important definitions, some other relevant definitions we have to understand. But first of all, we will understand section number 1. Section number 1 talks about title, extent and commencement. Title is companies that extent applicable to whole of India. Sir, Jammu Kashmir? Yes, Jammu Kashmir also. And commencement is that this act came into force. The sections of this act came into force on the different dates. So when they came into force on the different dates, so there is not a single date over here. Section 1 came into force at first time, and then different sections came into force on the different dates. So you need not to remember that different dates. Sir, on which companies this Companies Act will be applicable? First of all, company, 2 clause 20. Second, insurance company. Second is insurance company. Third is banking company, electricity company, company governed by any special act. But all these 4 companies should consider this point. What is this point? Because these 4 companies are having their special acts also. Insurance company is a company, so Companies Act is applicable, but insurance companies are having their respective special act also, like Insurance Act, IRDA. For banking company, we are having that special act also, Banking Regulation Act. For electricity company, we are having special act also, Electricity Act. So for a company governed by any special act, like NBFCs, they are the company but governed by special act, like they are also governed by the RBI Act. So if the special act provision is in the contradiction with the Companies Act provision, then in that case their special act will prevail. I am saying that on these companies, Companies Act is applicable, but these companies are having their special act also. So whenever it will be like that, there is inconsistency between their special act and Companies Act, then I'll say Companies Act 2013 will be set aside and their special act will prevail. And any body corporate which is specified by the CG in section number 1, on that company, the entire Companies Act will be applicable. If CG will specify any name of the body corporate here, like there is a body corporate NHAI, National Highway Authority of India. So if today CG prescribe the name here, so on that NHAI, the entire Companies Act will be applicable. But whether CG has prescribed anything, no. Now I'll come to the next definition. What is types of capital? First is the authorized share capital, or you can say registered capital, or you can say nominal capital. This is the capital by which the company is registered, the maximum capital up to which you can issue the shares. Second is issued capital. Issued capital means out of that maximum capital, how much shares you have issued to the public, that becomes the issued shares. Sir, what is subscribed capital? Subscribed capital means the capital which is actually subscribed by the public. Like you have issued 9 crore shares. I have taken the example that people have subscribed the entire 9 crore. But suppose you have issued 9 crore shares, people would have subscribed 8.9 crore shares. That can also be a case. Then I'll come to called up capital. Sir, what is called up capital? Called up capital is that amount of the share what is called by the company right now. So let's say the share is of 10 rupees, but the company has only called rupees 6 only. So that is called called up capital. Then paid up capital is how much amount actually shareholder has paid out of that called up amount. Company has called 6 rupees, but the shareholders have paid only 4 rupees. Yeah, any shareholder have paid only 4 rupees. So that is called as a paid up capital. Sir, what is books of account? Books of account is the records of cards. This is the mnemonic by which you can remember. Books of cards, record of cards. Record of cards बोले तो books of accounts. Records of cards means books of accounts. Sir, what is records of cards? Receipt and expenditure. See, records of receipt expenditure, records of sale and purchase, records of asset liability and cost record under section 148. These records will be considered as the books of account. Now I'll come to, sir, what is financial statement? Financial statement means the balance sheet, statement of P&L. If you are a NPO, then there will be no P&L, there will be income and expenditure. Cash flow statement, statement of changes in equity. This you will study in the Ind AS in CA final when you will reach to CA final, and explanatory notes. But you should keep one thing in your mind, that there are some companies, if they wish to, that they don't want to make cash flow statement, then they are allowed. They are given the exemption. They are having the exemption that if they wish to, that they don't want to make the cash flow statement in their financial statement, then they may not have cash flow statement in their financial statement. Sir, what are those companies? Small company or OPC or a dormant company. Sir, what is a dormant company? Dormant company, you have registered a company, but you are not having a business right now. You are saying that we will not do the business. So government says take the status of a dormant company. If you are not having a business right now, take the status of dormant company, and when you will have the business, then revive it. And any private company which is a startup, if a private company which is a startup, that is also allowed, that is also given the exemption. So these 4 companies are having exemption. They may not have. Sir, there is a doubt. You are saying they may not have they may not have cash flow statement in their financial statement. If they will prepare, then it is a non-compliance. No, I'm saying they may not have. I'm not saying they shall not have. They may not have. If they wish to prepare, that is good, na. Prepare it. If you don't want to prepare, then okay, it is absolutely your choice because you are exempted. So these 4 companies are given choice that they may not have cash flow statement in their financial statement. Then, sir, what is financial year? Financial year is nothing. It is starting from 1st of April, ending on 31st of March. But one thing you have to, actually 2 things you have to keep in your mind first. If any company is incorporated on or after 1st January of any year, if any company is incorporated on or after 1st January of any year, then the financial year will be ending on 31st March of the following year, next year. That means I'll give you example. If company is incorporated, let's say on 1st of December 2025, then the financial year will end on 31st March 2026. Definitely yes. But if the company is incorporated on 1st January 2026, financial year will not be ending on 31st March 2026. No. It will be ending on 31st March 2027. Similarly, if a company is incorporated on 30th of March 2026, the financial year will not be ending tomorrow. It will be ending on 31st March 2027. And if there is any company or any body corporate which is a holding company, subsidiary company or associate company of a company incorporated outside India, like KK Limited is the holding of any company incorporated outside India, or KK Limited is the company which is the subsidiary company of any company incorporated outside India. KK Limited is the associate company of any company which is incorporated outside India. In all these 3 cases, holding, subsidiary, associate, you have to consolidate your accounts. Now, suppose that company is incorporated outside India, you are incorporated in India. You are following the financial year April to March. They are following some different financial year. How you will consolidate your financials? Because they will be closing their financial statement on some other date. You will be closing your financial statements on some other date. How you will be able to consolidate? So you will not be able to consolidate. So that in that case, you can apply to the CG that please allow us to follow a different financial year because we are facing difficulty in the consolidation. So if CG will allow you, you are allowed to follow a different financial year. Right, sir. Then what is the definition of KMP? Who is covered in the definition of KMP? KMP covers CEO, MD, manager, company secretary, full-time director, CFO, and any officer who is one level below of the director. The officers who are one level below the director who are in full-time employment, and those officers only who are designated by board of director. It's not all officers below one level director. It's not every officer who is working one level below the director, that officer will be covered as KMP. No, only that officer will be which will be designated by the board of director. Then, sir, what is officer? Who is covered as the who is covered as the officer? Officer means any director. It could be whole time, it could be part time. That is officer. Manager will be covered as officer. KMP will be called as officer, and any person on whose direction the board is accustomed to act. You are the person, and on your direction, Mukesh Ambani is doing every act. That Mukku Ambani is doing every act on your direction, you will be considered as the officer of that company, because that director is doing everything as per your direction. So you will be considered as the officer. Sir, who is officer in default? Officer in default covers the whole-time director. The whole-time director will be called as officer in default. Sir, why we are studying this officer and officer in default? Because whenever you will be studying some sections, you will get that penalty wala part. You will get that penalty part. You will see that if in case of any default, company will be liable for the penalties, officer in default will be liable for the penalties. So you should understand that who are officer in default. So first I'll say officer in default covers the whole-time director. KMP will be called as officer in default. If there is no KMP in the company, then find that director or directors who were given the charge, who were specified that if there is no KMP in our company, these director or the specified director, they will be considered as officer in default. Then catch those directors who are specified and they have given the consent also. But if there is no such director specified in the company, like you are not having any KMP in the company also, and you also have not specified any director that we are not having any KMP, if there will be any default, these director will be liable. You have not even specified that too. And there is no KMP also, then all directors by default will be considered as the officer in default. Then all directors will be considered as the officer in default. Now understand who is another person who is officer in default. Any person who is under the immediate authority of board of director or KMP, who is just working under the board of director or KMP, and that person was given the responsibility of maintenance, filing, distribution of accounting records. That person was given the responsibility. And that person has actively participated in any default, or that person has permitted any default, or that person has failed to take the corrective steps to prevent any default. That person was knowing that default is going on, but he has not taken any preventive steps. So that person will also be considered as an officer in default. He will also be considered as an officer in default. So any person on whose direction the board is accustomed to act, the board is like depending on them. So board is accustomed to act on those person's directions. So we will say yes, that person will be considered as an officer in default. But sir, this point will cover us also, na? We are also the chartered accountants. We also give the directions to the directors, and directors are working as per our direction. Sometimes it happens that they will do the default. Then government will catch us. Government will like say, oh, you are the chartered accountant. Your direction is on your direction. He is acting. So they will say that you are also officer in default. So if you are giving the direction in the professional capacity, then you are exempted. A person on whose direction the directors are accustomed to act, that person will be considered as officer in default. But if that person is giving the direction only in the professional capacity, I was giving the professional advice, that is my work. If I am giving a professional advice, I will not be considered as an officer in default. And every director, if the contravention of the provisions of this act has been done, every director who was aware of such contravention, the director who was knowing that the contravention was going on, or that contravention is done by his consent or connivance, that he is also involved in that act. He is also involved in that act, and by the connivance and by the consent that act has been committed, that contravention has been committed, the director will also be considered as an officer in default. And in case it is a case of share issue or share transfer, then share transfer agent, merchant banker, registrar to an issue will be considered as the officer in default. This is your complete definitions, which are the relevant definitions for chapter number 1. One more definition I want to tell you that I can tell from the book itself. That is the definition of relative. That is the definition of relative, who is considered as your relative, because relative definition is also repeated again and again. So who is relative? Who is your relative? Sir, we know who are our relatives. But you have to understand here the meaning of the relative is a bit different. You have to understand who is your relative. The member of the HUF are relatives. The husband and wife are relative of each other. Oh, and the person who is related in such manner. So there is a person, his father is the relative. Father includes stepfather. It means the person, there is a person, his father, his stepfather is relative. His mother, stepmother is relative of this person, right? His brother, stepbrother is his relative. Sister, stepsister is the relative. The spouse of this person, there is no step spouse. That means wife of this person. If this person is he, because spouse he for she, he is the spouse for she and she is the spouse for he. So I'm treating like he is the person and the wife will be the spouse. So sister, brother, mother, father and son will be the relative. Stepson will also be the relative. Daughter will be the relative, but there is no stepdaughter. They have not covered the stepdaughter. Always and always remember there is only daughter. Then son's wife will also be considered as the relative. Daughter's husband will also be considered as the relative. These people are only your relative. These people are only your relative. So that this definition you also have to keep in your mind, because they will ask again and again this relative. So you have to keep in your mind, and by this we have beautifully covered chapter number 1. Almost all the definitions which are very much relevant for your further chapters, that I have altogether covered. Now let me take you to some questions you will be able to understand. These are the questions what I am discussing now. I am intentionally discussing the questions what I am taking right now in the writing practice sessions, because I have got the request from some students that sir, we are not able to understand the writing practice session also, because they are also in the English now. So please take that into English also. So what I'll do is I'll do the revisions, all the revisions of all the chapters in the English. But writing practice, for that what I can do is whenever I'll complete the chapter, I'll do the revision and I'll discuss all the questions of the writing practice what I'm taking currently live. That I will discuss the question, you will be able to understand the question, you will get that idea, and you can watch that lecture, you will be able to get the idea of writing answer also. I'll discuss the questions what I'm taking presently live right now for the writing practice sessions. So for chapter number 1, I took these questions. Question number 1 is that there is a company XYZ Private Limited, right? This private company is having 1 lakh convertible preference shares, and this question is clearly saying these preference shares are having voting rights. These preference shares are having voting rights. So there are 1 lakh preference shares, voting rights, and 10 lakh equity share. There is no need to write specifically that equity share is having voting right, because it is very much clear that equity share by default have voting right. So this company is having 1 lakh preference shares having voting rights, 10 lakh equity share having voting rights, and preference share is of 100 rupees, equity share is of 10 rupees. Cross Limited is having all the preference share of this company and 1 lakh equity share out of 10 lakh. They are asking whether Cross is holding this company's subsidiary, yes or no. We will tell yes. Okay, yes. Kaise? How? How, sir? How? First of all, you have to write down the definition of the holding subsidiary company basically, right? And section 1 says that the act will be applicable on the, they have asked the question, one more question, that this company was incorporated in the Companies Act 1956. Whether the Companies Act 2013 will be applicable on this company? Yes, because it is a company. Company means a company. So you have to write down, yes, section 1 says that Companies Act will be applicable on the company, whether incorporated under this act or any other previous company law. Then you have to write down the meaning of the word public company, then subsidiary company, and here I have given the analysis. There are preference shares of 1 lakh preference share of 100 each. So the voting rights will be of 1 crore rupees. Because voting right will be in proportion to your paid up share capital. That I'll tell you in section 47. So in this case, you are having voting rights of rupees 1 crore and equity share capital is having voting right of 1 crore. So total voting power in the company is 2 crore. Out of that, company is holding 1 lakh preference share, that is entire 1 lakh preference share of 100 each, so 1 crore. And 1 lakh equity share of 10 each, that is 10 lakh. So that company is holding 1.1 CR voting power. The total voting power is 2 CR, and that Cross company is holding 1.1 CR voting power, that is more than 50%. So yes, I will say Cross is a holding company, and this company will become the subsidiary company. Cross will become the subsidiary company of XYZ Private Limited. Very simple question and very easy to understand. Then this is the question that I have discussed on that private company. Maximum number of member can be 200, but the past employee will not be considered in the limit of 200. See, there were some employees who were the employee from 1st of April 2006 to 28th of June 2016. To 28th of June 2016. And when they were employee on 1st of July, they got the shares. But they have sold the shares on 1st of August 2016. Now on 1st of December, they bought again shares. They bought again shares, whether they will be counted in the limit of 200, yes or no? Definitely yes, sir, because they have sold the shares. Now that condition is over. Now if they will again buy the shares, they will not be considered as a past employee, that they cease to be the employee but continue to be the member. Why? Where you have continued to be the member? Yes, you have ceased to be the employee till this date. On this date, you cease to be the employee. Yes, from this period to this period, you were considered in the 200 limit? No. Because during this period, you cease to be the employee, but you continue to be the member. Because as that member, but the shares you got during your employment. But when you sold the shares, the condition is absolutely over. Now on 1st of December, when you will again buy the shares, you will not be counted in the, you will be counted in the limit of 200. Definitely you will be counted in the limit of 200, right? Right, sir. Then after that, there is a very straightforward question of holding company, subsidiary company, that this company is having 5 lakh shares and turnover is 2 crore rupees. It is further understood that this company is a public company, is holding 2 lakh equity shares out of that 5 lakh. Okay, Yellow Limited is holding 2 lakh shares out of that 5 lakh. So 40% voting power does not give you the holding subsidiary relationship. Yes or no? Yes, sir. So that there is no holding subsidiary. And that company is having paid up share capital of 50 lakh, turnover of 2 crores. So can I say that is a private company also, and limit of small company is also satisfied. So that company is a small company also. And if that company becomes a small company, that company is allowed, that company is given exemption that they may not include the cash flow statement. So question is asking whether it is a small company. Yes, it is a small company. They have filed financial statement to the ROC, but they have not included cash flow statement. Whether they have done any default? No. They have not done any default because that company is a small company, and if that company is a small company may not include cash flow statement, so they have not done any default. Right, sir. Then this is a very simple question. This is a very simple question, that this company has listed non-convertible redeemable preference share on private placement basis. This is not a listed company. This is a public company, has listed non-convertible debt security on the private placement, because these companies equity share are not listed. This is again not a listed company. This company is a private company and issued non-convertible debt on a private placement. Again, this is not a listed company. So first question they have asked, as per section 2 clause 52, read with rule 2A, tell us whether this is a listed company or not. So I'll say these 3 companies are not listed companies. Now they are giving remarks and asking you which is the holding, which is the subsidiary. This company is holding 2/3 of the director's power of this company. Means this company can appoint or remove 2/3 of the director of this company. So can I say majority director they can appoint? So this will become holding and this will become subsidiary. This company is holding 60% voting power of this company. So I'll say this is also holding, this is subsidiary. And this company is the subsidiary of this company is the subsidiary of this. So accordingly to the chain concept, this Sajagta Private Limited will become the subsidiary of this company also. And they have given one more remark, that this company holds 52% in some other company, but in the fiduciary capacity. Fiduciary capacity we do not consider. Fiduciary capacity we do not consider, so you will not become the holding. That other company will not become your subsidiary. You are holding in a fiduciary capacity. Right, so this is given, and this question we have already discussed, that Manav Limited, Shiv Limited question. Similar to that question, this is the question, but in that question, that company became the holding company, this company became the subsidiary company. But this is the question where this company is not holding more than 50% through its subsidiary. So this company will not become the holding, this will not become the subsidiary, because here the total shares are 8 lakh and they are holding 3 lakh and 50,000 shares. So it will be less than 50%. They will not become holding subsidiary. They will not become holding subsidiary. This is the same question as we have done in the revision Manav Limited, Shiv Limited, right? Right, sir. So these are the questions we have discussed also, and very beautifully we have covered the chapter also, and we have done the revision also, we have done the questions also, right? So if you have loved this lecture actually this I am starting for the very first time, and actually I need your support, that you have to share this lecture with everyone. I am giving everything to this lecture, right? So you have to share this with your friends, that someone is coming and he is going to teach you in a very best manner, in a very well manner, and you have to like this video, you have to comment on this video. whatever you have liked about the lecture, definitely you should write down and give me the feedbacks in the comment box. Definitely please share this lecture with your friends, and these notes, everything PDF, that board notes, you must be asking, sir, please give us these board notes. Now these are very beautiful. So these board notes you can also find in my Telegram channel link is there in the description. So please join the Telegram, and let's connect in the lecture number 2, and I'll upload the lecture number 2 for the incorporation of company, so that we will do beautifully revision of that chapter number 2, and then we will discuss the questions also. Right, sir. So at the end of every class, I used to say that keep working very, very hard, as someone somewhere is waiting for your success. At every class, at the end, I used to say this line, because yes, actually someone is there who is waiting for your success, who is waiting for you to succeed, and you have to work very hard for that. So that is what I want to say. That this is all for today. Thank you so much. Take care. Bye bye. And keep working very, very hard, as someone somewhere is waiting for your success. Thank you so much. Take care. Ta-da. Bye bye.